Hey everyone, this is a really quick earnings roundup. We have a ton of data we are parsing through, but wanted to just get a quick video out on two top integrated device manufacturers, Texas Instruments and STMicroelectronics. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. First up, Texas Instruments, one of the largest analog chip makers in the world, one of the largest chip manufacturers in the world, period. This was a messy quarter if you're a new investor, but I think it's maybe important to understand how Texas Instruments manages their business. They manage for the long term, so they don't provide a ton of unnecessary, what they deem to be unnecessary data from quarter to quarter. But high level here, revenue of 4.38 billion, which was a 6% decline from the last quarter and 11% decline from Q1 2022. They experienced weakness across all end markets except for automotive. Specifically, the percentages that they rattled off: personal electronics down 30%, communications equipment down a mid-teens percentage, enterprise systems, think data centers and servers, down 30%, and automotive up by a mid-single digit percentage. Again, overall down 11% year over year, largely as expected. A lot of stuff going on here. Texas Instruments continues to build inventory. They are up to over 200, approaching 200 days of inventory. They are comfortable building that up because they see a lot of long-term demand. A lot of capital expenditures coming this year and really for the next few years, averaging about $5 billion in CapEx every year. That's the expectation as they build new fabs. Ugly quarter, but largely as expected. This is going to be a slower but steady growth stock over time. So if you're looking for a long-term dividend stock, Texas Instruments is a fantastic place to park some money. Second, STMicroelectronics, one of Europe's largest IDMs, integrated device manufacturers, a big supplier to Tesla. Perhaps you know of STMicro because of their silicon carbide devices that they made for the Model 3, Tesla's Model 3, which started debuting with some silicon carbide chips in it back in 2018. This company is much more focused on automotive. Revenue of 4.25 billion in Q1 2023, which was better than expected, driven by automotive and industrial. So getting a ton of growth there from the auto industry, slightly offset from personal electronics. But overall, 4.25 billion in sales equated to 20% year over year growth. Profit margins were also up. And for the outlook for Q2, at the midpoint, they're expecting revenue of 4.28 billion, which would be a year-over-year increase of 11.5%. We are seeing some sequential slowdown for STMicro. Again, as expected, I get a little bit nervous with companies so squarely focused on the automotive industry. I think there is a decent chance that as automotive chip supplies ramp up to catch up with demand this year, we could see a fall off in revenue for companies like STMicro in 2024, perhaps late 2023 into 2024. So I have not purchased shares of STMicro yet, but fantastic growth story. And if you're interested in the automotive industry, the expansion of the EV industry specifically, STMicro definitely one to keep on your radar, and one that we still need to do a deep dive on here at Chip Stock Investor. We will get to that after earnings season is finished up. Just a quick hitting overview of what's going on here. Again, Texas Instruments, not one that we own, but if you're looking for a long-term dividend stock, something a bit more slow and steady in the industry, TI might be your ticket. STMicro, something faster moving, more squarely focused on the auto industry, could be a great growth stock to own for the next 5 to 10 years as the EV industry ramps up. But nibble. If you're going to nibble at all, do so prudently with this one. Again, I think there could be some pain in 2024 for companies more squarely focused on the EV industry. Stay tuned, everyone. Hit the subscribe button so you don't miss a video. Have a good weekend.